Morning, guys. Morning, everyone.
Morning, Scott.
How are you, John?
It's Anthony. How
Oh,
are
sorry. Your voices sound really similar. Yeah, I'm okay. How are you?
you? Yeah, good.
So,
Scott,
hey, Thomas, how are you, man?
fine and you?
Yeah, pretty good today. Had a good night's sleep for the first time in a while. The baby didn't sleep with us last night, so I actually got some sleep. And yeah, looking forward to I'm going to spend the weekend on tidying up some system development stuff. Um, I thought today we might go through the process for implementing that new stuff, and then if you guys are up for that,
Absolutely.
sure.
Good morning. Absolutely.
All right. So in the broad strokes, what you're always trying to do when you're making changes to systems is, first of all, not fuck it up. So what we're always trying to do is work out, are the changes that we made going to hold through forever in the future, because they have to, right? Like if we make changes and those changes don't hold solid into the future, then we fucked up a perfectly good thing. So it's a caution first kind of a thing. So what I have here, I've plotted. This is 50. This grey line is 50 trade expectancy. This orange line is 50 trade standard deviation, or roughly volatility, and the blue line is 50 trade average R value. So you can see that average R value and volatility standard deviations are a little bit lagging, but also a little bit smoother, right? So we have three distinct phases for what we're going through. So this early phase where the average R value was very solid between 4 and 3.3 and as low as, but really basically horizontal. And then we have the coronavirus crash and the subsequent rally, which are two extremely different phases, which the system performed really well in. And then we have this, which is the normalization phase. So what I think makes sense for me to do is to repeat the analysis that Anthony and I did, but split these into these three separate phases. So phase 1, phase 2, and phase 3, and see how our conclusions hold up individually. And if they don't hold up, then maybe we have to go back to the drawing board. I think the Bollinger trending and John's work on the hammers and shooting stars, I think that's good to go. I've thought about that deeply. I can't see a hole in the logic. It makes logical sense. It's good to go. So what I want to do is, first of all, try and pull a hole. It's the Bollinger stuff, which is higher risk. So I want to pull these apart into their component parts, and then I'm going to take Ralph's data and Anthony's NQ data and ES data, and see if the assumptions hold true. So that data is completely sequestered. We've done no analysis on it. So if what we're doing is right, we should see at least some confirmation of it. NQ and ES are a little bit different than FX, but we should see some confirmation. And the other thing I want to do is pull out longs and shorts. And what we've seen in the stock market is that ES and NQ, there's very, very significant differences long to short. And I don't know, I haven't even looked at that in Euro USD. So yeah, I've just got probably another big weekend of grinding it out. So I'm looking forward to that. it's monsoon season here in Bangkok and it's flooded, so it's just you can't go anywhere anyway. So it's a good day to stay at home and do some system stuff.
Scott, for the long and short, I just look at it on the 6-hour chart, and I saw that on a weekly basis there is a correlation between the trend and the short and long.
Really?
But
Do you want to do you have data or do you want to share? Or?
no, I just take a look at the last few weeks and just plot something, but I did it. I don't have my chart actually.
I think that makes sense, and
There is a small correlation, yes.
okay. The other thing that jumps out at me is this is our expectancy. You can see that when volatility rolls over, we've had a drawdown here. When volatility rolled over, we had a drawdown here. Volatility rolled over, we had a drawdown here. I don't know if it's happening every time. Volatility rolled over, we had a drawdown here. I don't know if it's happening every time, but there's it seems like that might be something else to keep into account as well. That's really problematical to do from a system building point of view. Switching off and switching on systems is typically fraught with danger and produces, speed wobbles. It's not generally a thing you would do unless you're really trying to polish a turd. So so let me expand on that a little bit. So when you're starting with something that is a pretty good system and you're trying to make it great, you don't necessarily want to get very aggressive, because every change you make to a system makes it by definition more fragile. And we don't want to, we have a limited amount of fragility we can introduce before we've got something that's going to have big drawdowns. And if you introduce too many rules, one day you have a 20% drawdown. That's just the way it is. So we have to be really, really conservative and careful and cautious. If you're starting with a system that sucks, if you're starting with a system that's really very borderline, then you have to polish the turd and introduce fragile things and put into place monitoring regimes to switch your system off when it stops working. So I don't think we're in that situation. So anyway, so that's where I'm at. I got a big weekend of work in front of me, and yeah.
Who wants to? Just one question on the data. And sort of a little bit focused around what John put on Facebook, and then he sort of retracted it. But John suggested that maybe the Bollinger Walk, and then he sort of got confused because he's sort of thinking the walk, where we're talking RTVs, not following and that sort of thing. But is it worth, because you've still got all your actual numbers to the side, haven't you, of the results on all your Bollinger stuff?
Yeah.
I'm wondering whether it's worth just going through each chart and looking to try and see if the 5 or the 10 were actually walking when we took the Bollinger touch, and then whether that had an impact. So, if you've got both 5 and 10 walking the Bollinger, and then we're trying to take an RTV, is that hurting us or not?
That's a fairly obvious thing to do, and that would be an elegant end run around more complicated things. So yeah, I think that should definitely be done.
And because that's all we've got to do is look
first.
at the charts and determine. All we've got to do is look at the charts and determine the walking. We don't have to worry about trying to pick numbers or anything else, because you've already done all your 1.5s and 2s and 2.5s and that sort of stuff. So
I could run through that in a couple of hours. So I think that should probably be done first, because it's the lowest hanging fruit, right?
Okay. Yep.
Yeah, I'm going to get started.
I've got my daughter this weekend, and my wife. I could help from Wednesday, probably. I could help do more stuff.
Sure.
Well, my wife goes back to an office job on Wednesday.
I'll try and get that done over the weekend. We should have an idea. This is kind of like an unwrapping the layers of the onion sort of situation. So what I discovered with Anthony, what Anthony and I discovered together when we were working last week, was we'd do something, and then whatever we did would give us a new idea and a new thing to test. And it was like, let's do this, and then what's the next thing? What's the next thing that came up? And I think that's probably the process that we've got to go through again, like just going down the rabbit hole with this.
Yeah, because the other days, I mean, when we start looking at the stuff that John did in the Hammers and Shooting Stars, when we start looking at those and just looking at, you know, one CE walking potentially being enough, because you said that's what some of your guys are looking at algos. One of you guys looking at algos is looking at as well.
That would be extremely hard to test because we don't have the data of the trades we didn't take. So that's probably.
Oh, yep.
We'd have to put that onto Thomas. That would be something that would have to put into his wheelhouse.
Yeah, and his little. Yep. No worries.
If
Okay,
you
thanks,
want,
John.
sorry.
Thomas, would it be difficult to test walking confirming evidence if there's only, instead of saying you need 2 time frames of confirming evidence, just walking on 1 time frame? Would that be sufficient?
Okay.
Either 5 or the 10.
On the trades that are already in the baseline.
No, because those there would be by definition trades that aren't in the baseline.
Okay. Yeah.
So,
Yeah. Yeah.
But
It is a good theory. If I can just weigh in there, I think it is a good theory because I've noticed there'll be times where it's walking very strongly on the 10. So you might have 3 candles in a row where the closes are sequentially outside the upper Bollinger. So you're walking on the 10, but the 5 is not, but it hasn't been able to pull back to the moving average. So it's still very strongly trending, but you don't have both confirmings. But often that 10 it just stands out like dog's nuts.
So one of my students who automated it, he based his automated system, which is like a tiny subset of what we're doing now, on that. So he thought that was a very strong edge.
How's he going with it, Scott? Do you know his results?
He's had to put it on hold because he's an economist for a Chinese bank, and they've just got him all hands to the pump. He does economics. He's an economist for a Chinese bank, and they've got him working 60 hours a week right now, and it's actually really cool. They've given him access to the cell phone location data of every Chinese person, and they can predict economic activity really, really accurate by when people start moving, the economy boosts. The economy is running right, and when people stop moving and stay home and stop spending, then the economy goes down. So they've actually given him location tracking data for a couple of billion people, for 1 billion people. So
Holy shit!
Yeah. So
where are we heading?
Yeah. I kind of imagine that particularly nice, but it's China. That's what they do.
Leave your mobile phone at home.
Yeah. All right.
Scott, I put up my chart with the weekly
please share
long and short.
Please. Ooh.
Yeah, so this is the weeks I start trading with my real account. So this is only the that I have. But here you see you have a clear downtrend, and we had a short size that was surperforming. Here it was less obvious, and here again a really strong trend, and the long side was clearly losing, and the short side was winning.
Very interesting.
So,
maybe we have something there. All right. So
now just determining the trend.
So I mean, what makes logical sense is putting our, and is this a 6-hour chart or a daily chart, or what is it?
6 hour. Yeah.
I guess what makes logical sense is that's fairly easy to do. Is applying our current trend definition, which is fairly mechanical, and I can actually that and the Bollinger Walk that you just discussed. Those are 2 easy things to do. Those are low-hanging fruits. I'm going to do those this weekend. You there?
It's interesting, isn't it? A bit there about that trend.
Yeah, very interesting. I'm gonna run some data there and see what we see.
And that's the same pattern that you've seen with Ralph, isn't it, on ES? And
yeah, but I have a basis for rejecting it on ES because stock markets by definition are upward biased, right? Like,
yeah,
if your company stops being one of the 500 biggest companies in America, it gets out of the S&P 500.
you're kicked out and you're replaced by someone who's performing better. So,
but to be honest, the 500 best companies in Somalia probably make money too. Like that is, we're not talking about the 500 average companies in America. We're talking about the 500 best companies in the biggest country in the world. Of course, they're going to fucking go up over time. How could they not? Like you'd have to be a retard to think otherwise.
Yep.
Yeah. Which of course I wish I knew when I started trading, that it just wasn't lines on a chart and short and long weren't equivalent. But yeah, if it holds true on FX, then it's a definite game changer. Okay, so summary. Let me make some notes here. So I think the first thing to check should be that, like the trend bias.
So in case you're thinking you are, you're not shared. In case you're thinking you are.
Oh, sorry. No, I'm just making notes. So first thing we should check is trend bias. Second thing is Bollinger Walk invalidating Bollinger mean reversion. And the third thing is splitting the data into 3 regimes and revisiting minimum viable R. What I'd like to do is, if we go down the minimum viable R route, I'd like to have a framework that makes it an adaptive thing rather than an absolute, like 3 pips is bad and 3.5 is good, because that doesn't make sense. If we look at our average range here never gets below 4 now, and it spent the first third of our system trading time never getting above 4. So there's fundamentally different things. All right, so I'm going to get started on that this week. Who wants to go first? Thomas, how was your week?
Yes, so the week was great. Not a lot of profit, but it's the first week in a while that I have more wins than losses, so that's great.
And no mistakes.
And no mistakes this week, yes. Less trade than last, so it also helped, I think.
And we talked about that last week, right? Like we talked about.
Actually, I didn't choose to took less trade. Actually, the system, I took every trade that come in my way, and this week it was only 17.
There was a couple of days where it was just impossible to take trades for most people.
The system just didn't take trade for like a few hours and more than that. So.
Yep.
So yes.
Wow, I'm really happy with that, and while the system is doing it hard, you're trading well, which is that's a great sign, and couldn't be better. And I think it's important to acknowledge that when you go a whole week without making a mistake, no one in the world can do it better than you. Like you are literally the fucking Michael Jordan of this shit. Well, you are. Like no one can do it better. I can't do it better. You can't do it better. Like you're at the peak of performance, and it's worth actually acknowledging that, for that 1 week anyway, you're as good as anyone in the world. And
taking into bear in mind, Scott, that he's full-time job while he's trading as well.
Yeah. I mean, I certainly couldn't trade and have a regular job going in the background. Like that would be beyond my skill level. So I think it's celebration time.
Yeah, and I'm helped because due to the algorithms that I'm running, it's actually helping a lot.
you've got so for the guys who are listening, Thomas has Algo's doing like the heavy lifting. So he's like a semi-automated process. When it gets time to hit go on the trade, he hits a button and the mechanics are taken care of. So he doesn't have it becomes easier when you don't have as much thinking to do.
Yeah, and for instance, here you see you add this RTC that the system that I took, but then the system put an order on this retest for the RTV,
After.
But because it didn't take this peak in consideration, but this peak one, the second one, the one of the hammer.
Mm-hmm.
Of the red hammer. So he said, okay, this is a new trade. So he take a bit. I said, that's. I wanted to talk about it.
That's a second bite of the cherry situation. That's not a trade you should take. It's probably still a valid trade. So let's examine that in detail a bit. I don't have any data on how well an RTV after a successful RTC goes. I don't know if we get enough data to calculate that. I mean, it's not a terrible trade as long as the new trade is still high and tight, right?
Yes, that's why the system put the order. It's because that was a valid trade. It was anti, and I say okay, but I removed the order because I thought it was just too borderline. The order did get executed because it happened very quick. It put the order and the order get triggered immediately. So I just exit manually.
Well, it's covered by the system rules, by the second bite of the cherry rules. So it's not something that we should be taking, but it's not a bad trade. Like in terms of, is that an edge? That's probably an edge.
Okay. So yeah, I need to implement this second cherry rule.
From an emotional point of view, it's it kind of hits you in the nuts when you've just had a quick win and then you give it back straight away like that. That's kind of hateful.
Yes.
I'd be wary of how that would feel in the hard right edge of the chart.
Oh, and something I didn't mention last week, I did some funny thing on my spreadsheet. So a bunch of analysis. I spent a weekend on that. So the basic stuff that we already know. Then for the confirming evidence here.
Mm-hmm.
I don't have a lot of data, so this is not really significant. But as I'm filling out my spreadsheet, it will become. And also by 30 minutes, 1 hour, 2 hours. Sorry?
I think the time analysis is probably what I'm seeing across the board from other people, from Anthony as well, and anyone who's got information here chime in, is that later in the day is looking a little bit better.
Yeah, and you see, I'm trading on for me, the 2 a.m. to 11 a.m. for me, it's 8 to 17, basically. And so yeah, the half of the day where actually the system doesn't have currently data because we are trading only until 14 for me.
I'm going to get you some more data on that, but it's not quite as exaggerated as that, but definitely that first hour is not cool.
Yeah, so I will see after 6 months probably this data will be more interesting.
Yeah. Well, we already have a lot of data. That's not difficult for me to. Okay, so what we're looking for: equity curve long short. Okay, so what we're seeing is those are fairly uncorrelated, right? Negatively correlated.
Yeah.
And
so yes, basically I just have fun making ton of analysis.
Yeah, I do this stuff all the time. This is huge, man.
And yeah, also I did that. I did just for fun. It was basically the risk in pips divided by the ATR, and so and then I plotted the equity curve, I don't know if you understand what I mean.
So you're taking the R value divided by the ATR.
Yes, and basically it gives you a range. So if the volatility is bigger, it say okay, it's above above 1 ATR and so on. And so we see at the beginning there is a clear drop here. That's interesting, and then a consistent move up. I thought it was interesting.
I'd like to revisit that when we have more data.
Yes, absolutely. So that was it's just that for me today.
Awesome work. Thank you, man. That's really good. Derek, haven't seen you in a while. How are you, man? Derek, you there?
Can I jump in next if Derek's not there? So I'm going to go out.
Oh, jump in.
Yeah, okay. So I've sort of this week probably got a little bit more serious with my record keeping and actually broken my record keeping down into separate records. I keep my live trading record now separate from my baseline record that I keep. So I've sort of basically just I can see more precisely exactly what my performance is on an exact equity curve, etc. So I'm only trading 3 hours from 3 a.m. to 6 a.m. US time for both the NQ and the Euro US dollar. So
and you're trading 6E?
I think I made one. No, I'm trading Euro US dollar through Stone at the moment.
Gotcha.
Just for still better leverage than trading with the futures.
Gotcha.
Yeah, my week this week, Euro US dollar, I came out break even for the week before commissions, but I also had a couple of trades that I did ride past the 1.1R, just looking at support and resistance and a few other things that we've sort of started to notice on the chart around sort of moves that seem to be happening. Sort of, I call it the 10-20 reversal, or 10-20. So it tends to have a range from 2 o'clock. I tend to quite often have a range of 10 points one way and then 20 points back the other way.
Are you tracking those variations from?
Not really, no. Sort of just.
That's probably a good idea. If you're starting to bend things up a bit, it's really nice to have clarity around them, because otherwise, in the back of your head, it's in 3 months' time, you'll be wondering, like, was this a good idea? But if you have this constant clarity about, okay, I'm doing stuff that's like a little bit off the reservation, but it makes sense and it's made me money every single week, then you can have a lot more confidence in it. So it gives you just a better feeling when you do it. So when something eventually goes wrong, because something always goes wrong, then you've got the clarity to know, oh, it's not the changes I made, it's just like random luck, or
yep. Yeah, so I'm keeping notes in the notes column, just saying that I trailed the stop versus the overnight range. So basically took it up 1 hour every time there was a when it got 1.1 hour, I took it to break even. Or
the easy way to keep your records for this is to just have a separate column, a separate tab called discretion. And if the discretion made you money, you enter that as a positive. So
yep.
723 on the 8th of October, I extended a target from 1.1 to 2R, and it made me 0.9R. So that's a plus 0.9R in the column. And, and another time it was going to make 1.1R. I went for 2 and I got stopped out for break even. So that cost me 1.1R. So that's negative 1.1R.
Yeah.
And it's just a nice, okay, my discretion made me 2R this week. I should do discretion again next week. And
yes.
You can also objectively say that your judgment is good then. Without that, it's hard to say, am I good or was I lucky? Or
yeah, no, for sure, I understand that. And my NQ for the week, I had one trade that I got in, and then I realised it was DV, so I jumped out and it went on and was a winner. And then I had another, that was Thursday, and then Friday I had exactly the same situation, but I didn't notice that it was a winner. I didn't notice it was drawn into DV and it went on to get a winner. So sort of I had 2 mistakes. One I jumped out, one I ended up being in.
So you had a mistake that made you money. which is the worst type of mistake.
I had the worst type of mistake you can have.
Absolutely.
But I didn't realise until after I'd made the mistake, and as soon as when I sort of realised that it was like, okay, I should have got out. I know I should have got out of that trade. So it wasn't a case of, oh wow, that was a shit trade, and
and you let it ride.
Again, it was like I should have got out of that like I did. Yeah. But so effectively, I record because I do my 80%, my stop, my ISL goes at 80% of the actual range on my NQ trades. So if I should be putting in a stop at 5 points, then I'll put it in at 4 points. If I should be putting it at 10, I'll put it at 8. And I record that as so if I hit the stop, then that's a 1R loss. And then so based on that, I had a pretty good week at 5.8 after the week.
So, do you want to explain to the guys exactly what you're doing and how well that's been going so far? Because it sounds like a good experiment.
So with my NQ, I trade. So I take exactly the same signals that we take in the current system. That we're using the euro US dollar. I took the theory that Scott said that, with the ES, we're rounding to the quarter, to the next pip, or to the next tick. With the NQ, I've always sort of been told that the NQ trades about 3 to 4 times what the ES does. So when I did my initial testing of it, where I tested a few months worth of data, I sort of tested rounding to the half and then rounding to the next full point. And I sort of settled on the next full point, partly because it's easy to do, and the results were near identical anyway between the two of them. So when I get a signal, I round up and I round to the next full point. I put my stop though at only 80%, so come up 20% from where the ISL should be towards the entry point.
So the logical basis for this is NQ is more whippy. It's the tail that's being whipped around. So your trade if your trade threatens the stop, it's probably going to jump into the stop, or it's going to work a little bit better than what you think because NQ moves faster.
Yeah, correct. And you get a lot more, just a lot more movement in the NQ anyway, as you say, and it's just.
One thing I'd like you to track is Ralph is getting substantial slippage on the NQ, and he's getting no slippage at all on ES.
Okay. Yep. At the moment, I'm only in the micros. I'm trading off the NQ chart, but trading micros because the long-term plan is that I will be trading NQ proper. And also, I'm not trading $1,000 or anything like that at the moment. So yeah, that would become a lot more prominent.
Well,
further into it we go.
He's trading $3,500 and he's getting no slippage at all on ES and NQ. It's not a deal breaker, but it's becoming something to watch. So it's just something to keep in mind.
Yeah, for sure. At the moment I'm still not taking anything with DV confirming evidence. I track it on my baseline. I still track everything on it, but at the moment it's still not showing as a positive edge.
Sorry, explain that, please.
So if DV is some confirming evidence, again, minimal trades anyway. There's only 26 trades altogether that had DV as confirming evidence. But from those 26 trades so far, it's -4.5.
I wouldn't be too worried about that because DV has consistently been, very strong edge in other markets, and the system's been in drawdown, and it hasn't been a particularly big sample, and it's been. I wouldn't hold too much stock in that yet.
And that's right, and that's why I'm still tracking it. But at this stage, I'm not trading that this DV is confirming evidence, but I am still tracking it on each trade.
Okay, so one thing I want to point out to the guys listening is that it can be emotionally really helpful to change the system rules a little bit just to suit you, and the reason for that isn't that necessarily that your changes are going to be good or my system is bad or like one is better than the other. The reason is just that feels like it's yours and yours alone. And there's nothing wrong with that. And every time I've learned a system off someone else, I've ended up changing it in very small ways and felt like I owned it then. So yeah,
it gives you that bit more buy-in when it's your system. It's a bit easier to follow
just
the rules.
Just a little bit of emotional buy-in, and I also find it a little bit more comfortable in drawdowns.
Yes. Yep, it's not their system shit. It's my system's struggling at the moment.
Yeah, it's not their system that sucks, and this motherfucker scammed me, and fuck. It's just like, okay, my system's not working.
Yeah, and look, I'll give you full credit. That's one of the things that anytime I talk about you to anyone, and sort of when I'm talking about trading, that I turn around and things I say is, this guy, they say, oh yeah, you're following someone, yada yada, and I say, look, this guy, the first thing he says is test the shit out of my system because I could be full of shit. So and that's what I love about you is that blatant calling out that don't trust it until you've tested it.
The reason that comes from I had a near disaster in trading was when I was in this evil speculator. I was a blogger on this evil speculator blog for my friend Michael, who's my programmer, and I got to be treated with a lot of respect and I write well about price action, and people just assumed that I really knew a lot about stuff because I can write well about it and I was building trading systems, which were still pretty crappy trading systems back then. And I was getting all this people telling me how good I was when I wasn't good because I wasn't making any money. And it was disastrous for me. And I just try not to repeat, I'm not even the best trader on this call anymore. Like I'm an okay trader. I'm a really good system
Thomas
designer.
is the best on this call.
Well,
I'm not
perfect. He was perfect.
Perfect. No one can be better. No one can be better. And I'm only trading 2 days a week, so I can't be better. I mean, if I was better 6 months ago, you guys are going to be better in 6 months. There's no doubt at all. But fortunately, I designed my system so that you don't have to be that good to trade it. I'm an objectively competent, above average professional trader, but I'm not as good as Ken Long, who I've seen extensively. I'm not as good as Al. I'm not as good as Linda. I'm just not as good as those guys, and I design my system so I don't have to be that good. But I'm good at system design.
Okay. Thank you for your time, Scott, and thanks everyone. Have a great weekend. I'm going to jump straight off and go off and spend some time with my daughter.
You too, man. Enjoy your time with your family.
These guys there.
Scott, I just remember because how I just woke up, so the ID come back. Basically, on the stop limit, I have a few trades that basically passed through the order and didn't get triggered, and I wondered if this, because I think it's a kind of negative edge, because usually the trade that where this happen is basically trade where you can have a quick win. And because the price is moving really fast, but if I didn't get filled, then the price come back. Actually, there is a higher chance that this is a losing trade.
That is
every time on the losing trade and never on the winning.
That is a very interesting thing, because I'd always just left it on, but I never tracked whether or not those ones where I later got a fill were losers or winners. I never tracked it. And
so because maybe this is just me that get bored of not having filled on the winning trade, but I think that might be a losing edge to keep my order on if the price moves through very quick.
How often does it happen? Because it happened about 1 in 35 trades for me.
For me, it kind of happened a few times a week. I mean, maybe 4 or 5 times.
I think what makes sense is to just track it, just color it a different color in the spreadsheet or add a different column, and then we go back and visit those in a couple of months, and
And so yes, because this is with stop limit. And also the other question is, do I should I add a margin with my stop limit, because I put basically the same price with the no slippage at all?
No,
But
you shouldn't.
No, I shouldn't.
No,
Okay,
no.
okay.
It's so what you do if you add a margin is that you add it's a devil deal. You're subtracting from the edge in every trade to try and save, to try and save a random trade here and there that you don't even know is a winner or loser. Like that's probably not sensible.
Okay, so I just record the trade and see if it's a negative edge to leave my order, or when
and keep in mind that stuff that we personally see, if you hear 100,000 years ago, if you heard a rustling in the bushes, you have to pay attention, because it might be a tiger about to eat you. So our brains are biased towards noticing negative things. So, which is why all the news that you see is negative news. Like you never see like positive news on the news, because people aren't interested in it. We only notice negative things. So we think we see this stuff that's happening. Oh, this is a negative edge. Anytime you see something and you think it's a negative edge, you have to automatically take into account that your brain, by definition, sees negative edges and positive edges as different things.
Yeah, you're right. Maybe I'm fooling myself, but for me, it's kind of make logical sense, because
It makes sense. It makes sense.
On the way up, and if it goes back, there is a higher chance that it can be a loser.
It's definitely something that has a basis that I wouldn't be surprised if that was true.
Okay. So
I think you have to track it.
Okay. Thanks.
No problem.
My approach with that, Scott, is if I get jumped and it goes through to target, or to pretty much 90% of the target, I'll just cancel the order.
I cancel the order if it gets to the target before the fill, personally.
Yeah, is that part of the rules?
I think I don't remember if I put it in, but that's the way
I think you recommended it once, or suggested it was good practice.
For me too. That's why I talk about basically the trade that don't go to the target, and then reverse to trigger the order. And that's the one I'm talking about, because if it's reach the target, I cancel.
Yep. I'd be very interested to see the data on it, and I think that's probably somewhere where you could have improvement.
Okay.
All right. Derek, you want to go next, man?
Oh, hey everybody. Hey Scott. Yeah,
Hey,
Derek here from Vancouver, Canada. Rainy Vancouver. Good to meet you all online. This is my first time. I was on earlier, but somehow my internet was kicking me off previously. So just so you guys know where I'm at, I'm a super newbie here. I've been going through the program again. I signed up about 3-4 months ago, I think, but have been sort of sidelined with some personal issues. But I'm back on the back in the saddle here. So where I'm kind of at right now is, I'm just starting the back testing and baseline and moving into to daily reviews. So I just want to let you all know that, because it sounds like you guys have been pretty active in the system for a while here, and there's some real pros. So just wanted to sort of introduce myself and let you know that I will be online more and more here as I sort of get back into things. And that's kind of who I am and where I'm coming from.
Awesome. So your Vancouver time, so that's
it's a 5:43 p.m. right now.
Okay, so anytime in the late afternoon for you, I'm going to be online. So I'm going to message you calendar links for me. So
okay,
if some of the calls are at weird times for you, just when you have questions, don't wait. Just book something with me, and usually I can jump on and we can sort it out in 5 minutes, right?
Sounds good. That's great.
I'm online in your late afternoon 7 days a week. So
I saw that sort of like 5:36 p.m. You seem to be my time. You seem to be online. So I'll keep an eye on that.
And I'm here to help. And I don't want you to feel like you're doing it alone. And so how I would go about this, and how I'm suggesting you go about it, is break the system up into 3 stages. So stage 1 is identifying mean reversion setups, which are the RTVs and RTCs.
Yeah.
With all the confirming evidence. Once you can do that, add in decreasing volatility, skipping trades. And once you can skip the shitty mean reversion trades, then add on the trend following trade. So I would do it in a 3-stage thing. So it's if you try and assimilate the whole system all at once, it can be confusing ball of wax.
Right.
When we break
so
it
mean
down,
mean reversion, and said trending, the TTs are last.
Yeah, I would do TT as last.
Okay. Perfect. That's what I'll do.
All right, man. Perfect.
I'll be in touch, Scott, for sure.
Please do.
Yeah.
Who wants to go next? Richard?
Yep. Hey, Derek,
Right.
I'm on the East Coast, so I'm 3 hours different to you.
Oh, nice. Whereabouts, in Canada or in the US?
Well, very close to Canada. I'm in Detroit. It's a 20-minute drive away.
I'm a Toronto boy, so there we go.
There you go.
So, guys who are listening, Richard originally learned the Crazy Ivan system, which is the first system I ever learned. And he did that with me as a learning exercise. So his execution skills are really, really strong. He just doesn't know this system, which is much better than the system he originally learned.
Yeah, I must say, Crazy Ivan was pretty crazy.
It was very crazy, yeah. But it's a great way to learn to execute.
It is, yeah. It is. It was a lot of keyboard work.
Yes. So how are you going?
So, doing okay. It's been a busy week. The baby's had a cold, so we've been suffering as well. So, and she's just started walking, so it's doubly hard at the moment. But we're pushing forward. I've been working on the spreadsheet. I've been I'm going through the RTC stuff. I haven't really gone back to looking at skipping mean reversion trades on downticks. I'm kind of going to ease myself into that. So
well, let's get RTVs and RTCs done right first. I mean, that's 75% of the system. Like once you've got that, you've broken the back of it, right?
Yeah. Maybe I can just share my screen. So I'm just going to...
Please.
Will it let me? For some reason, it's not. Oh, maybe it is. Oh, just give me a second. It's asking me to.
It's fine.
Permissions. Oh, I'm gonna have to quit. Tell you what, Scott, do someone else, and I'll quit Zoom and come back, and I'll be able to share my screen there.
I think you're the last one. So just we'll wait for you, dude. John's not here, is he? John Garcia, he usually goes away and does the kid stuff. And yeah, just reboot Zoom. We'll wait for you. It's no big deal.
Okay.
Scott, I can jump in while
Please.
While Richard's doing that.
Yeah,
that's all right. So
how was your week?
Anthony, Victoria, Australia. Yeah, look, good. It was a pretty quiet week, to be honest. I'm still trading the window of time, the 7 a.m. till 10 a.m. window. I didn't trade Monday because it was a bank holiday in the US. So I've decided, per my plan, if it's any holidays either in Europe or in the US, I'm going to sit out for those sessions. It's just what I've decided. So Tuesday to Friday, I only took 9 trades for the week. 5 winners, 4 losers, 1.81 R for the week. So a little bit different than the 10 R of last week, but that's the ebb and flow.
Positive. And we did that great work together earlier in the week. I was just so happy with that.
Yeah, that was really good. And I want to dig a little bit deeper into a couple of things, just on as we chatted on, what was that, Monday, wasn't it, that we did that?
Yeah, it was Monday.
Obviously, you've got bucket loads more experience than I've got on system development, that sort of thing. But sometimes the simplest ideas are
your ideas are every bit as good as mine, man. And it's a rabbit hole, right? Like you test one thing and go, okay, like the first 3 things we tested on Monday were completely wrong ideas, bad ideas. Like my 3 best ideas were wrong, and that's something that happens a lot.
Yep. Yeah, and that's the thing we spoke about. You know, if we can find a way to keep the system simple, but get a little bit more juice out of the winners, then it's definitely worth doing the analysis, even if it ends up being a dead end. So I'm going to spend a bit of time this week on that, just to give you an idea. The 5 winners for my week, all 5 of them got to a 1.5R target comfortably, and 3 out of the 5 reached the 2R. So it's not, I still don't have enough data yet. And part of my mindset on it is I want to go back and just check any time that there's a target that's 5 or less, how often do we get to, you know, and down the same logic that we were doing, regardless of whatever the confirming evidences are or the trade type is. Basically, once a winner's a winner, how often do these ones that are 5 range or less, 5 target or less, how often do they get to a multiple greater than 1.1? And is it worth looking at? So I'll do a bit more data on that,
Please.
and give you the numbers for sure.
Yeah, I'm going to be back with some interesting data this week. So
yeah, and I mean, you go down a sophisticated level that I just sit there and go, oh yeah.
Oh no,
and nod my head at.
I'm a grunt work guy. I just
yeah, but I find that fascinating too. But
I think what you would have seen is that, you know, there's a lot of people who are like, oh, I need to automate this so I can do all this sophisticated programming stuff. To me, we went through a shit ton of data in like 2 days of work, and I learnt a lot, and I learnt more than someone could do programming it. And programming it would have taken a day too. So, okay, so we spent twice as long and we got more out of it than someone who just pressed a button and got the results spat out of them. So to me, that's time well spent.
Oh, spot on. Look, I'm 51 years of age, mate. So when I first started working, a lot of the stuff we used to do was manual. And I think you said you worked at Subway. My first job was at McDonald's, and we used to do a lot of statistical work, and it was all manual. And I knew it inside out. And then during my time there, we phased across to computers. And then as I was training people, you know, that once I'd been there 8 or 9 years, you're training new people. They didn't understand. They just understood I feed in data and out pops a result, but they didn't understand the meaning of the result. I
did a master's in computers in the early 90s, and it was fucking punch cards, man, and Lotus 123 instead of Excel and macros.
What happened was, you know, before computers, the human was the computer, so you had to understand it. If you didn't understand it, you didn't know whether it was right or wrong.
And we do. I think the key thing to understand here is that we do not have statistical significance on anything that we do. Even with 5,000 trades, we wouldn't have statistical significance by the time you start slicing and dicing things up into component systems. So we really have to, you know, use our brain and come up with intelligent, you know, we need to have a logical basis for understanding it, and that logical basis needs to be a testable hypothesis, and it needs to test out on other data that you're not just data mining for.
Yep, absolutely. I've got a quick, just system-based one for you today. I think I know the answer, but I just want to get it clarified. Can I share my screen?
Please do.
And also, trust me, it's easy to make mistake with new code.
Yeah, you got to double check, triple check everything, don't you?
Yes.
Can you guys, are you looking at my trading view screen?
Can see. Yep.
Okay.
That's a really nice looking setup too, man.
It's just this setup here, right? So this obviously makes the Bollinger touch here. We're not in decreasing vola. So you got higher close, lower close. So you've got a complete setup. This candle here triggers the order, right? Because the high of this is 16.9.
So the order is triggered from the setup bar is 1046 candle. At the close of the 1046 candle, which is the time that matters, is the only time that matters is the close of that candle. We're not in DV. The fact that we go into DV after the setup is entered is irrelevant. Good trade.
Right. So good. So this trade triggers the order,
yes,
and then at the close of the candle activates DV.
Now it's worth noting that if you got some of that bullshit where it was a round number and it didn't quite trigger the order, then that would be a different situation, but it's not.
So if it didn't trigger the order, you would cancel the order because you're now in decreasing vola. But
Correct.
because it's triggered the order before the candle has closed,
You're on.
when the trade has been entered, it's according to the rules and you leave it go. You don't
And-
say, oh, now I'm in a trade that I shouldn't be in. I don't cancel that trade.
If you think about the logical basis for that, it introduces an enormous extra level of complexity if you have to jump out of trades because you're in DV all of a sudden. It's just a whole lot of extra work. You can never take your eyes off the screen. You can never relax. You can't walk away and take a piss when your trade's on, which is what I actually do.
Yep.
Just even if it was an edge, it's just an impractical thing to do. Like it's just going to make your life a shitty situation.
Yep. Perfect. No worries. And just I'm doing some work on I got a little bit of a background in computers as well, so I've been doing a little bit of trading view code, and I'm just trying to come up with deliberately my candles are over here on the 5, for example. They're just a light green and a light red color. When they're walking, they're dark red, for example, and when they touch, the border goes dark red.
There you go.
So just straight away visually, I don't have to go, oh, is that what's the price? What's the Bollinger? It's just visually, oh, yep, that's a touch. Yep, and now I'm walking.
That's a great addition. That's a great addition.
So I've just got a little bit of tweaking to do with it. I'm not 100% happy with it now, but once I am, I'm happy to share that in the group or in the system. Yeah,
I would absolutely use that. Yeah, that would be useful.
Yeah, it's certainly helping, no doubt about it. And even this one here, like it's a higher close, right? So it's a green candle, but I've made the border red on this one here purely to say, yep, I'm still touching the Bollinger. And the opposite happens with the upper. I've got a green border and a dark green body when we're walking.
Great.
So that's it. Got lots of time. We're not allowed to do anything in Victoria still. So
you're still locked down?
We're still locked down. We find out, we're allowed out for 2 hours a day and 5 kilometres from our home. But we're down to an average rolling of about 8 cases now. So tomorrow we find out what our new freedoms are.
For once, I can beat you with Bangkok. We've got massive protests that are going to descend into riots and chaos here. No doubt in the world. The young people are completely revolting against the military dictatorship here, and the government banned assembly of more than 5 people in one place, and the kids have ignored it, and they unleashed the water cannon on them yesterday, and the kids want democracy, and the military dictatorship doesn't, and it's becoming a real showdown here. So,
yeah, strange times.
Yeah. All right. Thank you for that, Anthony.
Thanks, mate.
And Richard, I think we'll come back to you. You there, Richard?
Yep. Let me share my screen.
Please.
Yep. Okay, I think that's there. Can you see it?
Yeah.
So what I did, what I was doing this week, Scott, was just working on my spreadsheet and just building my spreadsheet. So I've seen the baseline spreadsheet and some other stuff, and this is effectively mine. So a few of my own formulas, and I'm not an Excel wizard, but it's kind of nice to go in there and just do some simple stuff to get rid of like errors and all the divide by zero stuff, and just make it automatically do something. So this is what I did, and then I started going through the baseline to put some data in to test it out. And maybe you could just talk me through a couple of these trades that I was just going through, because I was completely stumped by these when I started looking at them. So this is the 1st of October. This is the first trade at 216. This is what it comes up as. I was just using the trading view profit loss tool for shorts and longs. So this was
this was in the baseline at let me just pull it up.
216 on the 1st of October.
All right.
And my question is, why it didn't become a 1 hour profit? Because the candle there at I can't see what time it is now, but that candle there.
This was a loss.
But why was it a loss? Because that touches 1.1744, which was the profit take.
Okay, let me.
I remember this trade. There was actually an opposite trade that was triggered at the middle of the trade. I don't know if you count it in the baseline.
Okay, did it hit the?
Look at the middle of the trade. You see there is a touch of Bollinger, a low close, and a wick that trigger probably the order. And this is and then the second trade gets lost.
Let me bring it up. 10 to the first, 216. I'll just bring up my charts and all right, I'm just gonna share my screen.
Yep.
Okay. Okay. So here,
216. Yeah.
216 is here. The target below here. So our entry point is 49. Our stop loss is 54. So that's 5.5. And so 49 less 5.5 is 43.5. So the low here is 44. It gets to 5 pips, but not 5.5. So,
no, I'm sure. I mean, my data's looking different. I'm sure mine is different. It's actually it's showing it as shaded dark grey as well, and I've got the same stuff on there. I wonder what I'm doing wrong.
So we're risking 5 to make 5.5.
So
okay.
That's what it is. Yeah,
it's that extra half a pip.
Yeah.
No, so 49 less 5.5 is 43.5, and it just misses it by that much.
No, that makes perfect sense now, and it makes sense for the next 3 trades as well that I started recording. So So now let's clarify. So we're looking at 1.1R rounded up or down to the nearest half pip or full pip. So in a practical sense, 3 becomes 3.5, 3.5 becomes 4, 4.5 becomes 5, 5.5 becomes 6, 6.5 becomes 7, 7.5 becomes 8, and so on and so forth. 9 becomes 10, 10 becomes 11, 10.5 becomes 13. Makes perfect sense. Yeah, that's exactly the reason. So that makes sense.
Cool, man.
Yep.
All right, guys. Yeah. Great week, and great week of work, and I'll see you all. I'll see you all on Tuesday, hopefully, and then next week as well.
Bye. See you.
Thanks, Scott.
Have a good weekend.
You too, guys.
See you guys. Take care.
Good job, Thomas, particularly too. See you, man.